So today we are here to talk about what is happening in the Toronto real estate market. There's a lot of concerns, especially about the condo side of things, and we're going to do a deep dive into that. We're going to look at some of the data as to what is actually happening in the market versus what the media is purporting. And then we're going to try and edge into what the fall could look like and as we head into 2025. So lots to dig into. My name is Ralph Fox, and I'm the co-founder and broker of record at Fox Marin. Today we have joining us the lovely Corey Marin, founder and broker at Fox Marin. And we just want to welcome everybody to the Toronto Real Estate Podcast. Thank you so much for joining us. How is your day going?
Good morning. I'm so thrilled to be here to talk about this today, and my morning is going well. I did manage to blow dry my hair just for this podcast, so I feel like that's just a win right there. Every time a woman washes their hair and blows it out, you've got a big star towards your day. So
Dyson hair wrap?
Dyson Airwrap, that's right.
Nice.
And they are not a sponsor of this podcast, but we'd be very welcome to having them anytime. So I am happy we're talking about this topic. And this topic's really a response to some of the comments that we received last week from our podcast, which I really want to acknowledge that we really love everyone's comments. And whether your point of view agrees with this or not, we always just welcome your feedback. I think it's just really interesting to see the responses. And one of the questions that we got asked was, could you take a deeper dive in terms of the inventory that is out there currently on condos specifically and break it down? Like really, what is on the market? Is it studios? Is it one bedrooms? Is it two bedrooms? And so on. So that is where we're kicking things off today. And we do have some charts as well that I think will just give you a visual aid as to what is going on. So as Ralph mentioned, we're going to start with what's currently happening right now, specific to condos. And then we're going to move more into a little bit of a forecast. And if you're looking for an overall picture about the different segments in our forecast heading into the next 3, 4, 5 years, that was on our podcast last week. So let's jump in here. So this first chart here is looking at Toronto specific. So I want to make sure our viewership really understands what we're carving out here. So Toronto specific, and this chart here is looking at active listings. So we're looking at what is currently on the market, comparing the last 5 years, year over year, looking at July 2020 up to July of this year. So we've extracted this data from our system, from the TREB market stats, and all those yellow bars are looking at what's active. So what's active by the end of each reporting period or at the end of each month. So just think about it as what inventory is sitting on the market by the end of each month. That's what you have to think about. And then we've also dissected what the average condo price is every single one of those months year over year. And that is highlighted with the turquoise background. And then above the bar graph itself, you're seeing the black font and then you're seeing the blue font. And that is showing how much inventory in condos across Toronto is available at the end of each month. And then we're also highlighting what the change is month over month in the blue font. Okay, so I hope I explained that just briefly so you have context. So you can see here, when we look at the end of the chart, that we obviously have more condo supply on the market than we have over the last 5 years, which we all know already. So we have over 6,100 condos for sale at the end of July 2024. And you can see that's a big jump from last year in July, where we have a 61% increase in condo supply on the market. One thing I'd really like to note is when I've pulled this data in the past over the summer, the condo supply has been closer to, at times, 7,200, 7,400, almost 8,000 at one point. So there has been some absorption of the condo supply, and or people have taken their condos off the market, or they've opted to rent them out. So it's just a little bit less out there than I've seen in the past when I've done this chart. And you can also see that compared to 5 years ago, prices are still up in the condo sector overall. So if the average condo in July 2020 was $683,000, we're now at 748,000, just slightly less than last year, which is actually mind-blowing to me, considering all the negative news out there about how much condo supply is out there and how prices are falling and the condo market is crashing in Toronto. So I think this is a very helpful place to start. Ralph, is there anything you want to add to this?
Yeah, if you look at the fact that last July, there was 3,800 condos on the market, we are up by 61.39%, up to 6,000 condos on the market. You would say, just based on those two metrics, if that's all the information that you had, that there would be a dramatic reduction in prices. To see that we're only 6,000 lower or 4,000 lower on average for the average condo is really interesting. So a couple things to really look at or start to think about when you dig into this. Number one, there are no forced sellers, at least as of yet, on the market. And that's why prices are holding. So part of that is because anybody who purchased a condo was stress tested over the last 5 years, meaning that they could afford over 2% above the posted rate from the time that they bought their property. So it's not necessarily an affordability issue. And as I've been saying, people will cut back elsewhere in order to continue to hold their properties, especially, and we'll get into this a little later, if they believe rates are going to continue to come down. If they're on a variable, that's very important to understand, or if they're going to be refinancing in the future. And so you have a lot of investor units on the market that are tenanted. They would like to be able to sell it at a number that would give them a good exit. And even though they're cash flow negative, I've seen reports saying around $750 to $1,000 a month, they can hang on, especially if they believe that rates are going to continue to come down. So there are no situations where banks are forcing people to sell. We've seen this for the last few years in this high interest rate environment where they are extending out amortizations, where they are working with sellers, landowners or property owners, so that the banks are not forcing people to sell. They are working with homeowners and investors. And so that's why, at least up to this point, you see prices still holding. Now, could they soften a little bit into the future? Absolutely. But for now, this explains where we're at. And if you start to think about what the future, how things could play out, is there an impending crash coming? Maybe not. I don't think so.
I don't even want to say anything because somebody in the comments is going to freak out on me.
Well, that's really disappointing because people want to see the market crash. Like they're just praying and dying. I've seen this for 20 years. I've read every McLean's article talking about this over the last 20 years. People on YouTube sitting in their basements just really want to see this collapse so badly because it'll give them some level of satisfaction, but it hasn't happened, and there could be a continued softening, but there's no reason to believe, and we'll get into this a little further, why it's forthcoming in the near future.
100%. So let's keep diving into this a little bit more, and in response to some of the viewer questions from last week about, can you break down what is actually for sale? And so that is what we've done here in these next slides. So this next one is speaking specifically to studio apartments. And just for our viewers to understand, studios are like very New York. It's basically like one big room that holds your living room, your bedroom, and your kitchen and your bathroom. And they tend to be under 500 square feet, probably closer to 400 square feet. It's not an asset class that's really taken off in Toronto, to be honest. I actually really love studios. They're the best way to get into the market. They're your lowest entry point. However, I do want to acknowledge that a lot of the supply on the studio side are really poor layouts. They're almost an afterthought for builders. And so they try to squeeze in a few studios whenever they're releasing new units for their new developments. And oftentimes they're terrible floor plans. So if anyone ever wants to talk to us about studios and what a good studio floor plan looks like, we would be happy to do that anytime. And we don't have a huge amount of studio supply, but this is just a quick snapshot of what's going on with studios. You can see they're just not a huge percentage of what has ever been for sale in condos and what's currently for sale in condos. We only have 177 of them on the market right now, which is up 15% from last year. And prices in this category tend to fluctuate. And yes, we've seen a little bit of a drop off on this particular category, but nothing that is considered to be a fire sale or concerning. And I've also broken down just the occupancy. So 48 of the 177 on the market are tenanted. 23 of those are owner occupied and 89 of those are vacant. And the other 17 of them that are available on the market are other. And other being a combination of maybe they're partially tenanted or partially owner occupied. So we're not really seeing a trend one way or the other in this category, but I think it's a really good one to pay attention to because the average condo in this category right now is got a valuation of about $422,000, which is totally a manageable price point, especially knowing that you only need to put 5% down on your down payment for asset classes under $500,000. And what can you buy in Toronto for under $500,000 now?
I think it's really interesting if you listen to what the media is saying. They're saying that all these little investor shoeboxes are flooding the market. 177 units right now, under 500 square feet studios, is not a shocking amount to be on the market at all. And so that's really interesting to only see a 15% increase in inventory or listings sitting on the market at that price point. And what you will see is when the condo market bounces back, this is a segment based on affordability. As interest rates come down, where you will see first-time buyers desperately just trying to get something in the market come back. And I think this 422 number is very, very low. And I would expect to see that when the market, especially the condo segment, rebounds, I'd expect to see a snapback in this segment very, very, very quickly as these will get absorbed really fast because 177 units across the city is not very much. And the well laid out, well marketed ones will be positioned to have the best upside. The other thing to keep in mind with this segment is while you were saying, Corey, you can purchase these properties at lower down payments. Under 500 square feet, it becomes challenging to get financing with a lot of banks. So I think that is where you have the biggest pushback with smaller square foot condos in the city currently with the big five banks is financing can be a bit of a challenge based on square footage. So make sure you talk to your lender or mortgage broker if you're looking at investing in this asset class.
I love that. So I also wanted to touch on a brief case study for some of the units that we've sold in each of these categories. And I'm not going to go into depth on them. I just want to acknowledge that we've been working in this segment at all different price points and sizes. And just to speak to why it may or may not have been a successful sale. So we had this little studio apartment, adorable, on Richardson, which is the downtown east side of the city. So think of your Distillery, Canary, waterfront area. This one was under 500 square feet, 0 bedrooms. That's how it's going to be marketed. We ended up changing strategies a couple of times on this one, but as you can see quickly in this slide, beautiful photographed. It was staged. It was vacant. So there was not a tenant in there, which makes it exceptionally easier to try to sell your condo in this current climate than it would be if there was a tenant there. Obviously, it looks adorable. It looks good digitally. It looked good in person. It was freshly painted. And our listing agent, Jessica, along with Ralph, they decided to use a list low strategy. So they listed for $399. I mean, that's just an amazing way to grab potential buyers' attention and their agent. And they ended up in a multiple offer scenario, meaning there was more than one person bidding on this little cutie pie. And it ended up selling for $455. So a little bit higher than the market average that we saw in the former slide. So just wanted to showcase this so people understand that this type of product is selling on the market with the right marketing strategy and the right pricing strategy.
And this one did struggle a bit.
Yep.
So we had it priced at a higher price point It did not sell, and then we went with a list low strategy, and that's ultimately what got us to that sale price, although it was less than our client's expectation, which was probably closer to the high 400s, maybe into the fives, but it still sold. And these type of properties, when they are vacant, have a tremendous upside versus tenanted properties because there are not a lot of investors, understandably, with interest rates at the price point that they are now looking for properties, and end users, meaning somebody who wants to move into a condo, doesn't want to have to deal with having to evict potentially a tenant or having a situation where a tenant doesn't want to leave. And that's why in this segment of the condo market, the vacant and staged homes are always going to have an edge and always have the most appeal to a potential buyer.
1,000,000%. All right, moving on. So let's look at one bedrooms here. So again, this has all been extracted from the Toronto Real Estate Board. I did not make up any of these numbers. We're just sharing what's happening in real time. I think this is also really interesting. So I want to pay attention to the right-hand side of this chart here because you can definitely see we have an increased amount of one-bedroom inventory on the market. So we have almost 70% more one bedrooms on the market than we did last year at this time. And we're looking at almost 3,000 units. But you have to remember, Toronto is massive too. When we say we're not focusing on just downtown. We're focusing on all of Toronto. This is like a huge amount of geography that we're covering here. So prices have softened a little bit in this category, and they've softened because there's more selection. But you can also see that 783 of these units are tenanted. 760 of them are owner occupied, and just over 1,200 are vacant, in fact. Okay. And I also want to let our viewers know that this is all one bedrooms. Some of them have parking, some of them don't, some of them have outdoor space, some of them don't. And this is all square footage. So this is classified not just those small 500 square foot one bedroom condos. This could include a beautiful 1,000 square foot one bedroom as well. So this is not broken down by square footage. This is broken down by room count only. Ralph, do you want to add anything to one bedrooms?
Yeah, it's again interesting. 70%, close to 70% increase in inventory on the market. And yet we've only seen a reduction in price by literally $15,000, $17,000, whatever the numbers work out to. But it's not really very much relative to the amount of inventory sitting on the market. So you have 783 that are tenanted. That's an investor saying, I'm getting rent. I might be short $500, $700, $1,000 a month. I'm qualified. My bank is willing to work with me. I know how hard it was for me to buy this property, and I believe rates are coming down if I'm on a variable or refinancing at some point in time. And so they're going to sit there and they're going to be like, well, if I can get my price, great. If not, I'll just keep the income coming in. And then you have owners, and this is something that we've seen where you have people living in their condo who know rates are coming down. They're trying to sell their condo to unlock that capital so that they can get into the freehold market while they know that the freehold market is somewhat muted relative to where it could be or will be in a few years' time. And so they're not forced sellers and they are unable to unlock their equity. Yes. And so they're sitting on the market hoping to get their price, but unable to get the price that they need. And so that's why you have a huge component of inventory that's on the market, but prices aren't dropping. You have 1,285 that are vacant. Now, those are going to be the most desirable and the most probable to actually sell. If they're vacant and staged and they have decent layouts. So you're dealing with a much smaller segment than you actually think that is sitting that may need to sell. If it's vacant, well, now they're paying empty, monthly fees for having their suite empty. There could be a higher urgency for those to sell, but those will also have the greatest probability of selling because they will be the most attractive to a potential purchaser who's looking to move into a condo.
Exactly. And some of those vacant units might be listed for rent as well. And so the owner's like, I'm going to list it for sale. If I get my price, great. And if I don't, I'll just rent it out. So they'll have two listings on the market at the same time in two different categories. So also wanted to acknowledge that. So I am going to flip to a quick case study here. And before I show it, I just want to acknowledge that this is a very unique one bedroom. And this is not the typical cookie cutter, glass condo that you see in your city places or your Fort Yorks or your Liberty Village. This is a very unique one bedroom condo. So I'm totally acknowledging that up front, but I think it's just very interesting because it's saying here, this is a gorgeous hard loft, one bedroom between 900 and 1,000 square feet, that there's still massive, massive, massive demand in the city for one-of-a-kind properties. And so we don't have a lot of true, authentic warehouse conversions in the city. Your authentic loft with brick and beam and exposed brick and exposed ductwork and high ceilings and the character that people really want to find for themselves if they're looking for an end user product. And so this is a loft that we recently sold on the East End. Beautiful. It was unique because it was also a loft that had outdoor space. It also had parking underground, which also makes it unique for a loft. And this is probably one of the hottest condos that we have sold this year. In fact, it sold in a day, I believe, or 24 hours. And we had, I don't know, how many showings did we have on this in the first 24 hours?
30,
20, 30 showings in the first 48 hours. So this one also did not sell at full asking despite all that activity. We sold it for 97% of the asking price, but well within the range that we had anticipated for this particular loft. So I think it's just an interesting case study to toss in there to say that not all one bedrooms are created equal. And yes, I agree. There are a lot of crappy one bedrooms in the condo market. And so again, if you have questions about what makes a good one bedroom versus a crappy one bedroom, I am happy to share my thoughts on that. And you can find some really amazing one bedrooms in that 500 to 600 square foot category that aren't necessarily these beautiful lofts per se, but they have a lot of generous features that make them stand out from the shoe boxes that a lot of people attribute the Toronto condo market to look like.
And I think it's just important as well to acknowledge, despite the Armageddon that is reported in the news and the media, there are buyers out there, and some properties are selling, still condos are selling relatively quickly. So it's not all doom and gloom. And I think that there will be maybe a flatlining or softening for a little while still to come, and we'll get into that. But into the future, it's really important to understand where we're at. And where we're at now is unique, interesting condos are still selling really quickly. And there are a lot of buyers out there looking for this type of inventory.
Exactly. All right. So let's move on to the 1+1. So again, viewers, so this is a one bedroom with like an extra little bonus room. It's not necessarily a bedroom. A den would be considered to be a study or an office or a side nook or something like that. Often people end up just using it for storage, it seems like. But a den is an actual carved out space that you could use for multi-use. So when we pulled this out, I thought this was also interesting. So up 72% in the amount of inventory on the market in this category. 400 are tenanted. 400 are owner occupied, and there is a vacancy rate here of about 750 units on the market. Was really actually surprised not to see a massive, again, shift in valuation year over year from even July 2020 to July 2024. We're still up in this category. Also acknowledging this is all different square footages that we have here for 1+ den. So you're generally looking at between 600 and 700 square feet. Maybe 700 to 800 square feet would be the general size for this asset class, but not seeing a drastic shift in price. In fact, you're still up from 5 years ago. And we do have an interesting case study on this one as well. But Ralph, I just want to touch base with you to see if you wanted to add anything about this particular segment.
No, it just goes back to tenanted and owner-occupied units are not sellers necessarily of last resort, nor are they the most highly desirable for purchasers. It's those vacant units where you're spending every month to have them unoccupied, but at the same point in time, those are the ones that are going to be most desirable, especially if they're great layouts and they're staged and marketed and priced properly. That's where you're going to get the sales.
Exactly. So we do have a case study here. I think this is a really good one for a 1+10. So one thing to acknowledge is that our seller was just super open-minded to partnering with us and wanted to do everything that she could to get the highest and best price, but she also wanted speed to sale was a priority to her. She didn't want her condo sitting on the market for 30, 60, 90 days. So she was great. She was like, I will move out. I will do any repair work that you ask me to do. We'll have this place professionally cleaned. We switched out some light fixtures. It had a really good 1+1 layout where the den was actually functional. The other benefit to this particular unit, its location. So it was right in St. Lawrence Market. It also had a wonderful balcony that had views that were okay. Like it was facing east. So you saw a lot of the train tracks to the south, but you also were unobstructed. So you weren't looking directly into another building like you would in some of the more condensed or high density areas in the city. And she was also very open to being aggressive on price. So we listed this property, I think I don't have it here. We listed it for $659, I believe. And then we sold it for 98% of the asking price. So we ended up getting $648 for it. And we were sort of thinking in the range of $635 up to $650 would probably would be the range in which it sold. And it also sold in 16 days. But I also want to acknowledge that that included a significant conditional period for the buyer to do their due diligence, which counts towards those 16 days. So things about this were that the seller was open-minded. We did the staging. We did great marketing. It had an amazing balcony. We showcased those features. And we were really, really on top of every single showing that went through this property, all the agent follow-up, and very collaborative with the buyer agent as well, because the seller and us knew that we were competing against a lot of other 1+1 inventory out there. So every lead possible that walked through this property was really important for us to showcase that we were easy to work with and we were ready to make a deal. And we did. And the seller is super happy and we couldn't have been happier for her.
And I think it's really interesting because it goes into a good location, a good building, a good floor plan, vacant, staged, sold relatively quickly at a decent price. That is what is happening in the market. And these are the type of properties that are selling. And so I think it's just important to understand that the whole market on its own isn't dead and it hasn't crashed and it's not necessarily crashing as we sit here today. And so it's just important to really start to see these tangible examples that we see every single day so that as you're watching this, you can sort of get a little bit more context than a headline in the Toronto Star saying it's Armageddon in the condo market.
Exactly. All right. I think this is our last one before we move on to sort of looking into the future a little bit. But this is 2-bedroom category here. And oh my gosh, agents, please jump in here. Help me if you can. But we have just flipped on our end from a system called Stratus, where we do all of our searching, to something called Realm. Oh my gosh, this flip over for us on the back end is just torture for me. And I'm the one who's just often scrubbing the data. And
yes.
I don't know, if you can tell me how to extract the difference between a 2-bedroom, a 2+1, and a 2+2 in an easy, effortless way, please send me a DM or just put it in the comment section or do like a Zoom recording for me, because I don't think there is. So before everyone freaks out, this is smushing this all together. So this is 2 bedrooms, 2+1s, and 2+2s. So these are larger units. That's all you really need to take away from it. There's 2 bedrooms where people can sleep. Okay. Again, some of them have parking, some don't, all different size categories. You can see this is kind of surprising because everyone's like, oh, the bigger units are selling. Oh my gosh, people need a place to live, blah, blah, blah. But we still have 60% more inventory in this category than we did last year at this time. And I don't think anyone's really talking about 2 bedrooms and freaking out about it. It's all these like cookie cutter ones that the media keeps going on over. And we have seen a little bit of a course correction on price, but again, nothing that makes me want to throw up when I look at it. So yeah, we're down. $877 last year was the average 2-bedroom plus. And now we're looking at just under $850 for a condo in this category. And yes, The bigger units downtown, 100% are selling over $1 million. Toronto's a big, 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 big slice of the Canadian geography. And 725 of these are tenanted. Just under 900 are owner occupied. And I found it surprising that over 1,100 of this size category is vacant. I actually found that to be one of the most surprising data points from pulling all of this together for you today. So that's a little snapshot into this segment. I also just want to acknowledge that this type of unit is a little harder for the investor to hold on to because generally speaking, the bigger the unit, obviously the more expensive and obviously the bigger your mortgage payments. But the other thing is your maintenance fees are higher. So your maintenance fees are higher and these tend to be in older buildings. That's when we used to have these bigger units and the big 2+1s and the 2+2s. A lot of developers don't create as much inventory in this category anymore. So these tend to be in older buildings. And if it's in older buildings, your maintenance fees are going to be even creeping up even higher. So from a cash flow perspective, the bigger units are harder to absorb a non-cash flowing scenario. Ralph, anything but 2 bedrooms?
No, I just think it's interesting, and it's a little bit contrary to what the mass media is pumping out about, the big weakness in the smaller units when you're seeing this really across the board in terms of inventory building up. And it's a little bit surprising, actually. I was surprised to see the numbers on this as high as they were. Yeah, it was interesting.
I know. I find it interesting too. So quick case study on this before we move on. This is a 2-bedroom that we sold on St. Joseph, which is the Bay Street corridor. So think of like Hospital Row area, newer construction, beautiful unit. It was owner occupied, but like partially occupied. We were able to style it around the owner's belongings. And he did a very good job keeping the unit in top-notch condition throughout the sale process. This was a slower sales cycle for sure. This is listed by Jess and Ralph. So Ralph will be able to jump in with a little bit more information on this. Beautiful views, though challenged because immediately to one of the exposures, there was a building going up in full construction right in front of one of the top-notch views, which is always very difficult to work around when selling any condo in any category in any market. When there's construction like that, that's always a big challenge to try to get over. Is there anything you want to add about this one? I know that it presented beautifully.
It presented beautifully. It was not an easy sale by any stretch of the imagination. I think there was a relist involved,
Yes.
So it probably took like in the 100+ days to actually sell. There were some unusual conditions that were thrown into the mix here in order to get it done and across the board, but it still sold and it allowed our sellers to transition to where they needed to make their next moves from a real estate perspective. And these properties, may not be easy given the ticker price of 1.8 million in today's high interest rate environment. However, they are selling, and we are selling and continuing to selling condos in this size.
Yeah, this size and this price point as well. In fact, we sold another loft actually a couple of weeks ago for 2.1 million.
Yeah.
And that went to downsizers, which I thought was really interesting. They sold their large residence just outside of the city in the 905 and then wanted to have what they consider to be a pied-à-terre. Not all of us would consider that.
Yeah.
They did, which I love, and probably always had a dream of having a loft in the city and purchased it probably within the first 3 weeks we're on the market. And this loft was gorgeous. So I'm really happy for them. So I think that wraps up the look at just the breakdown in terms of condos, average prices, and the inventory that is out there. And Ralph, I know you wanted to jump into the fall market and beyond that, and like really what is out there for people to be focused on and looking at when it comes to 2024 moving into 2025.
Awesome. Thanks, Cor. So there's a few things I'd like to highlight. Shout out to Ben Rabideau at Edge Analytics. He recently gave a presentation, so I'm leaning into a few of his slides, which really helps explain where we're at and where things are going. The first thing to really understand is the market is in the position that it's in because of inflation and because of interest rates rising pretty much in the quickest amount they have in an 18-month period. So if you look at this slide here, there seems to be now a general consensus that with all the Bank of Canada meetings and future meetings, that there will be rate cuts, which is really, really interesting. And so we could be looking at 4% overnight lending rate, maybe even 3.75% overnight lending rate by as early as end of this year. And the reason is because our economy is really, really, really softening. And I think the media doesn't really pick up on it as much. But if you look at GDP per capita, we have been in a recession for quite a long time. Over 7 quarters, we've seen a decline, meaning on the whole, we are getting poorer and poorer. So what's interesting is the economy is still functioning even though we've been in this prolonged recession. And it's because, very similar to what we saw during COVID, even though we're having increasing unemployment, a lot of that is at lower income levels. And so the mid and upper income levels are doing much better than the lower income levels. And that's why we've seen the real estate market continue to hold despite the increase in unemployment rate. The other thing that's really interesting is if you look at what's happening now in the United States, there's 100% consensus right now that there will be a rate reduction in September and that there could be future rate reductions for the rest of the year. Very interesting. A report came out, I think it was yesterday, with a revision of the employment rates in the United States, showing that they overcounted 1 million jobs over the course of the last year of reporting. And we just had a really surprising report that came out for unemployment last month, which showed a lot higher unemployment than economists were predicting. So the U.S. economy, and this is the most important thing, is not NVIDIA. It is far more complex than that. And when you take NVIDIA and when you take the Magnificent Seven out of the equation, you'll see that it's much, much weaker than people are seeing right now in tandem with what's happening here in Canada. And so if you look at the way our economies are set up, economists seem to think that we can have a differential of between 50 and 75 basis points between our rates in the US before it really starts to affect the value of the loonie, which, if it goes down too much, starts to become inflationary. So if the U.S., which is expected in mid-September, does do a rate cut reduction, that starts to give a lot more latitude for the Bank of Canada to move in tandem. We have inflation numbers coming out. It's anticipated that there'll be a reduction from 2.7 down to 2.5. So there seems to be a very strong narrative right now for a base case of a reduction in rates. And this is what's really important. We've had 2 rate cuts. Those have been very symbolic. But as rates continue to go down, it will start to become very significant. And we're going to move from symbolic to significant in terms of affordability over the next six months or so. So that's something that's really, really important for people to keep their eye on as this situation plays out. And this whole narrative of higher for longer, I think by September will be completely blown out and got by the wayside. So let's move on to the next slide here. And this is just going along talking about 5-year discount mortgage rates. And you can see how the fixed rate leads the variable rate. And you start to see that fixed rate coming down. And in tandem, you see the variable rate, which is really focused on the Bank of Canada. However, the fixed rate is focused on the bond market. And if we go to the next slide here, we can see the 5-year Canadian bond yield continuing to head down. And that is really what the 3 and 5-year fixed is focused on. And if we start to get a lending rate of under 4% on the fixed, the market will start to readjust from a psychological standpoint and from an affordability standpoint as more and more mortgages start to roll over. And I think what you'll do is you'll start to see a lot more buyers starting to ride that variable down. Now, again, this is just anecdotal, but one of the mortgage brokers that we work with, who's a partner at a firm that does over $1.5 billion in mortgages every single year wrote to me and said that their inquiries and pre-approvals are literally going through the roof right now. Again, that's anecdotal, but on our side as well, we are seeing a significant uptick in buyers looking or starting to have conversations about getting into the market. And so we are starting to see early days of a change in sentiment than what we've seen over the past, let's say, year.
Mm-hmm.
This is really important. And this is something, and I thank you, Ben, for putting this together because it's in a visual format, but the composition of the CPI, which is how they actually, the Bank of Canada calculates inflation. So if you look at the orange part, that really is an indication of mortgage interest that is composing CPI. So if you look at the month of June, what you'll see is that 50% of CPI is mortgage interest costs. And this is something that I've been talking about for a very, very, very long time, is that we are raising interest rates on top of interest rates based on the way they calculate inflation. And so if you look at inflation hovering right now at around 2.7%, 50% of that is in mortgage interest costs. So if you take that out of the narrative, we're under 1.5% in interest rates, which is in inflation, which is lower if you take out the cost of mortgage interest where we were prior to the pandemic. And so it's important to understand that the mandate of the Bank of Canada is to be between 2 and 3%. Today, inflation or CPI, today we're at 2.7. It's estimated or predicted that for the month of July, we will come down to 2.5%, and 50% of that is based on high interest rates and high mortgage costs, housing costs, which is caused by the Bank of Canada raising interest rates. So they have a lot of room to continue to bringing down interest rates, and I think that's what you're going to see. And that will have, as we move from symbolic to significant, that will have a very big impact on the real estate market, especially in the condo market, as time goes on.
Interesting.
This last chart, or the second last chart, is very interesting. So this is new home sales, and Ben put this together in tandem with the next chart, which I'm going to show you, which I think tells a real story. So you can see these blue lines here, and you can see the decrease in new home pre-construction sales. This is really, really, really important if you want to start to look to the future beyond the fall and beyond what can happen to interest rates and how that can affect the market. But if you start to want to look 2-3 years out. So what you have to understand is that new home sales are the future pipeline of inventory coming onto the market. Now, the reason is we're less than 5,000 sales. Now, I think that we would see on average, in an average year, 20,000 sales. And I think if we hit 7,000 by the end of this year, we'll consider that to be a win given the current course of events. And the reason is for this is it's very expensive for builders to acquire land, construct condos. And so downtown, you can't, despite the fact that there's low sales in central and downtown Toronto, you're just not going to see inventory selling for less than $1,600 or $1,500 a square foot on the mid to low end, let alone 2,000 plus on the luxury side. And so when you're a buyer or the investors that are out there, they're looking at resale right now at $1,000 or $1,200 or $900 a square foot. And it doesn't make sense to them. The numbers just don't make sense to buy pre-construction, to take the risk of something that hasn't been built and not knowing what the economic future climate is going to be like. You're going to say, you know what, if I'm going to buy something in the condo market, why not negotiate a good deal? There's lots of inventory that's out there. It's something I can stand in and something I can put a tenant in. And so when we have what we're having right now, a complete stall in the new home sales market, it is really going to impact the future pipeline of inventory coming to market. If you look at this, so there's 2 more slides actually. So if you look at this slide here, in the orange, you'll see condo starts. And then in the blue, you'll see new condo sales. So the new condo sales is plummeting, and there's an 18-month lag between condo sales and condo start.
Can you explain the difference just to the viewers between what a condo start is versus a new condo sale? I think it would help for clarity.
Yeah, for sure. So a condo start is when they actually put shovels in the ground and they start to build. They start construction. So you have sales. If we're not getting the sales, and a typical condo needs about 80% sales before they can get the financing from the banks to put shovels in the ground. And so if there are no sales, there are no shovels in the ground. And so you have a lag between sales and actual starts. And that's why you see that on this chart here. And you'll see over time this play out as completions of new condo inventory start to dry up. And that's where this last and final chart comes in. And if you want to understand 3, 4, 5 years down the road of the Toronto condo market, this completion chart is really, really, really important to understand. So we need to deliver about 40,000 new units every single year, and this is across the GTA, in order to keep up with population growth, mostly spurred on by immigration. Those don't have to be condos that actually are completed and go to sale. Those can be rentals as well, but this is the supply that we need. And so if you look from 2014 to 2023, you can see how we've just entirely missed it on completions. 2024 was not a bad year. We're still not close to the 40,000. 2025 is going to be a really good year, it looks like, with a lot of inventory coming on the market. And that should help take the pressure off of new buyers coming in with lower interest rates, because we'll have a lot more inventory coming online. So 2025 for the condo market looks to be a flat or soft year. But then when you start to see the decline from 2025 to 2026, and then the steep decline for 2027 and then 2028, like less than 5,000 condos coming online for a market that requires 40,000 every single year, you start to understand the potential supply implications that we're going to have by 2028, 2029, and 2030. And that's still why I'm going by my thesis. And we've had other guests and we've had economists on this channel talking about how by 2030, the idea of $1 million one-bedroom condo is not insane. And it actually has a real probability of happening maybe even sooner than that. And that's why when we talk to our clients who own properties, whether it's a condo, whether it's a house, whether an investor, whether an end user, we tell them to hold on and only sell if they have a reason or better use of the capital. And this makes us very unique according to some of the comments that we see in our YouTube channel. We're not trying to pump the market. We're trying to tell our sellers not to sell, even though they're our clients, even though it might be in our best interest theoretically to get a commission on a sale. But if you can just hold on for the next couple of years, or considering even acquiring more, maybe in 2025 or 2026, if you look into the future and you think long-term and you understand supply and demand, there is a serious shortage coming up in the future. And that is something to think about when you're considering making a real estate move now, or if you want to start thinking about either adding or building a portfolio.
I love this chart, and this also aligns with our forecast from last week when we talked about what the 3, 4, 5-year trajectory is for condos specifically in Toronto. I have one last question because I know we need to wrap up. I just know some people are going to be like, well, what about all these people who can't afford to close on their condos that they bought pre-construction that will be completing in 2025? What is your argument for that?
I think there will be a challenge, and I think some people are going to struggle. We've seen some people walk away from deposits and give their units back to developers. I can tell you in the conversations we've had with developers, they are very reluctant to force those type of situations on their purchasers. I know banks have been very, very forgiving in terms of working with this. I don't think they want to become sellers of last resort. So I think it's a whole mix of working with developers and banks and trying to figure out how to get through this situation. And it's what we've been telling our clients and in conversations with people. If you can figure out a way to get through the next year or two, there will be opportunity in the future. This too shall pass. And if you just understand that this has been driven by extreme fluctuations in interest rates, and they are coming down, and they're going to start to come down quickly. There will be a relief. You just need to get through the next couple of years. And so I do think there will be some pressures put on inventory because of what you just said. How much? It's hard to say. I mean, I've heard and read articles about the mortgage deferral cliff, right around COVID that never happened because banks came in and worked with sellers and homeowners. I've heard about it multiple times, and it just seems like people who have purchased these units are finding ways to hang on and finding ways to close. And some of them, unfortunately, have been put in bad positions buying at properties that are unlivable. And I think those are the ones that are going to suffer for sure.
Yeah, 100%. Well, I always feel these conversations are slightly like therapy for us. It's like real estate therapy. And I hope that our viewership finds that as well. And perhaps there is a silver lining and something to see on the other side of this. And I know that I'm looking forward to 2028, 2029, and definitely 2030 when we're just kind of over this last little hump. So I hope everyone feels motivated to hang on. And of course, if you have your questions, your point of view, or an opinion, please drop in the comments section. We always try to reply to everybody as well.
Awesome. Thank you so much for joining in.
Thanks, everybody. Have a great day.
Okay. Bye-bye.
Bye.